Thank you for tuning in and welcome back, team. Have you ever wondered what are buyer closing costs, how much they are, why do you even have these buyer closing costs? Well, in today's episode, you're going to learn that plus much more. After watching this video, you'll learn 4 new things today about buyer closing costs. You'll learn what are buyer closing costs, what fees you can expect at closing, how much are buyer closing costs, and how you can avoid buyer closing costs. My name is Andrew Finney, your real estate geek. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Thank you. So I actually upload 6 days a week, so go ahead and please subscribe now if you want to keep up on this real estate goodness. Happy to help out. So let's go ahead and get into what are closing costs. So specifically, when you get ready to buy a home, you're going to have that down payment, you're going to have that home appraisal, you got that home inspection, and everything called buyer closing costs. And a lot of people have been reaching out to me lately asking me, what the heck are they? So let's go ahead and answer that. So closing costs are actually fees associated with the home purchase that are paid at the time of closing of a real estate transaction. Closing is a point in time in which you actually receive title to the property that you just purchased. It's been transferred from the seller to you, the new buyer. It's oftentimes the time of jubilee and celebration because it's the time that you're going to get the keys to your brand new home. So that's number one. Number two, what fees can you expect at closing? That's a great question. There's actually 28 different common fees. I'm going to go ahead and list them out. But just keep in mind, depending on where you live in the country, the area, if you live in a state that requires an attorney to be involved in the real estate transaction or not, the fees may be a little bit different. So I'm going to list 28 very common fees for you so that you can know what actually comprise your buyer closing cost. So let's go ahead and get into it, okay? The first one is an application fee. An application fee actually covers the cost of the lender to process your application. Before submitting an application, ask your lender what this fee covers and ask them up front about that whenever you apply for the loan, okay? It can often include things like a credit check for your credit score, or they might actually roll in the appraisal right there on the spot. So all of that money is actually going back to you if that's the case, right? Not the application fee, but the appraisal is something that's absolutely necessary for you to be able to close. Not all lenders charge an application fee, and sometimes it can be negotiated, so ask. The second thing is an appraisal. An appraisal has to occur during the closing process of your home. Unless you're buying cash, then you don't need one. But if you're getting an FHA loan, a USDA loan, a conventional loan, you're going to have to get a home appraisal because you're not going to be able to get more loan than the appraised value of your home. Talk to your trusted real estate advisor when you get ready to write an offer on your new place and make sure that you're offering in line with fair market value. Okay. Third thing, this goes back to those attorney states out there. You will have attorney fees which cover the fees for the attorney to review the closing documents on your behalf and ensure that everything is on the up and up. It's not required in all states. It is an option in all states, but it's not required in all states. Some states do have it as a requirement that an attorney look over all your closing disclosures. Fourth one is actually a closing fee or an escrow fee. Escrow, just so you know, escrow across the country is called different things. On the East Coast, they tend to call it closing process. On the West Coast, they tend to call it escrow. It's the same thing. It's okay. So if you hear escrow and closing process, don't worry. It's all the same thing. We're in the closing process, closing on your new home. Okay. So the closing fee is paid to the title company and the escrow company or attorney for conducting the actual closing itself. Keep in mind, you got all these different people in there and they got to earn a living. So if they're title people, they got to get paid for that. The fifth thing is a courier fee. If you're out of state, or even sometimes if you are in state, there might be a need to FedEx something here or there, or UPS something there. So those courier fees could be a small portion of your buyer closing costs as well. So just keep that in mind, okay? So the sixth thing is your credit report. What's called a tri-merge credit report is pulled to get your credit history and score. So your score plays a big role, obviously, in determining the interest rate that you'll pay on your loan. You want to have that conversation with your loan officer when you're going through your loan pre-approval process, okay? So then the seventh thing is the escrow deposit for the property taxes and mortgage insurance. So this is pretty interesting. Often you've probably been asked to put down 2 months of property tax or mortgage insurance payments at closing. So when we go into point 3, when we talk about how much are buyer closing costs, I want you to consider the 7th point in this fee right here, because this comprises the largest amount of the fees whenever we get into the percentages that are usually the right amount to plan for. It's that escrow deposit and property taxes and mortgage insurances, because it's going to cover your first 2 months of property tax and mortgage insurance payments at closing. And when you combine that with all the other impound accounts, if you will, That's a lot of money for 2 months being paid up front and prepaids, right? So that's important to know about that. The eighth thing is actually if you're taking an FHA mortgage, then you're going to have what's called an upfront mortgage insurance premium. It's different than the mortgage insurance premium. So it's kind of like a couple of them going on right here, right? An FHA upfront mortgage insurance premium. If you have an FHA loan, you'll be required to pay the upfront mortgage insurance premium, which is generally about 1.75% of the actual loan amount that you took out, of the sales price that you took out. So you wanted to cover that with your local loan officer and make sure that you know if you have an FHA loan, what's happening with the upfront mortgage insurance premium. It's normally rolled into the backside of the loan, just so you know, but it is something that if you pay it off in full up front, you can go ahead and mitigate it. So something to talk about with your local loan officer. The ninth thing is a flood determinator, life of loan coverage. This is actually paid to a third party to determine if the property is located in a flood zone. If the property is found to be located in a flood zone, then you'll need obviously to have flood insurance. And that insurance is paid separately. So you want to go to the FEMA's website and explore different type of flood insurance options that you may have if you're in an actual floodplain or flood zone. Again, your trusted real estate advisor will be a huge amount of information in your local area there to help you out with knowing if that's your case or not. We don't want you to get flooded out. The 10th thing is a home inspection. You will likely get your own home inspection to verify the condition of the property, right? And you want to make sure that anything that's in the home inspection that doesn't quite meet the muster, you can ask the seller to fix it in the repair request. They might fix it, they might not fix it. Either way, at least you have clear eyes and a clear head walking into the home, and you know what you just bought, and you know what is needed to do with the home maintenance for that house going forward. So a home inspection fee, be prepared for that. The 11th thing is if it's an HOA community or a homeowners association, right, HOA, there are actually transfer fees, and generally the seller will pay for the transfer fees to show that the fees are that the dues are paid current, what the dues are, and a copy of the association financial statements, the minutes, the notices, the laws, the bylaws, the CCNRs. All of that's rolled into there. That is a closing cost, and normally the seller pays for it. In a strong seller's market, sometimes you'll get some pretty savvy buyer agents out there trying to entice the seller to accept their offer if there's like 10 offers on the table, and you might actually see some buyers that would be willing to pay the homeowner association transfer fees and the demand fees and some of the seller closing costs just to win the offer. I've seen it whenever I'm representing sellers. I've seen offers come in like that. It's a very creative strategy that can make a big difference sometimes in the mind's eye of a seller that accepts your offer. Something to think about if you're in a strong seller's market, okay? The 12th thing is homeowner's insurance. Obviously, you cannot close on your home until you get homeowner's insurance, so you need to make plans for that. So that you can have plans to cover any possible damages to your home. Your first year's insurance is often paid at closing. So that last part there is something that you really want to think about. The first year, the entire year of your homeowner's insurance is paid up front through closing. So start calculating buyer closing costs. Again, why they're called buyer closing costs? Well, they go to you, the buyer. And a lot of them are coming back to you in the form of future prepaids. Here's another one of them, right? So then the 13th one is a lender's policy title insurance. So this is an insurance to ensure that the lender that you, to assure the lender that you own the home and that the lender's mortgage is a valid lien, and protects the lender if there's any problem with the title. Similar to the title search, but always a separate line item as it pertains to the lender. To make sure everything was transferred free and clear into your name, protect the lender, protect you, everybody's protected and happy there. So then the 14th thing will apply if the house was built prior to 1978, which is a lead-based paint inspection. It just simply covers the cost of evaluating whether you shouldn't be eating the paint in the house. If you eat the paint in the house, it could cause damage if there's lead in it. It could be a bad thing. But anyways, that only applies to homes that were built 1978 or older. So if you're looking at homes built 1979 or newer, you won't have to have one of those. So the 15th thing are loan discount points. Now, points are a prepaid interest. 1 point is roughly 1% of your loan amount. So this is a lump sum payment that lowers your monthly payment for the life of your loan. So if you have like 5 percentage points out there, and I want to be very clear about this because this is always an interesting thing whenever I have a conversation or listen to conversations between home buyers that I work with here in Vegas and loan officers. When they're discussing points, it's not one full percentage point. It's one full percentage point of the price of the home you're buying. So let's say that you're buying a $500,000 house. One whole percentage point of that is $5,000, which will buy you essentially an eighth of a rate. So an eighth of a rate. So if you have like 5% interest rate, then you buy 1 point. In other words, you've spent $5,000 on that 1 what's called a lender point, then what happens is your rate will now be 4.875. So it's important to know that it's not one full percentage point, it's actually broken into eighths. So talk to your local loan officer about that if you have more questions. Okay, so that brings us around to the 16th thing, owner's policy title insurance. This is an insurance policy that protects you in the event that someone challenges your ownership of the home, and it is usually optional, but it's not, it just depends on where you are, because title does have an obligation to be able to prove that it was provided free and clear. So an owner's policy title is the strongest of the title policies. If you're not getting that, maybe you're getting a standard owner's policy, then you might want to see if you can up it to the owner's title policy just to ensure there could never be any disputes or challenges of your ownership of your home. The 17th buyer closing cost is the origination fee. The origination fee covers the lender's administrative cost. It's usually about 1% of the total loan, but you can sometimes find mortgages with no origination fee. So it just depends. Just look at that and make sure that you're evaluating the quality of the local loan officer that you're talking to, because if they're earning money from your loan, well, that's how they stay in business, and that's also normally a good idea of checking their online ratings and reviews to make sure they can perform and close. And if they're a lender that's known to close, that's better than a lot of lenders out there that fall out of escrow about a third of the time. So think about that and talk to your local loan officer if you have more questions, okay? So then the 18th thing is a pest inspection. A pest inspection is required in some states. It's not required everywhere. It is required in all 50 states, though, if you're getting a VA loan. A pest inspection will check for things like termites, dry rot. Like I said, it's covered in some states. Sometimes it's required for government-backed loans, like VA loan in this case. Repairs can get expensive if evidence of termites, dry rot, or other wood damage is found, so it's important to get that done up front, okay? 19th is prepaid insurance. Prepaid insurance, most lenders will ask you to prepay any interest that will accrue between the time that you close on your loan and your first mortgage payment. That's why you're like, oh, I don't have a mortgage payment for like 2 months after I close. This is why, all these 28 different things, this is why you don't have one, is because you're paying everything in prepaid fashion up front. So then the 20th point is a private mortgage insurance, which is different, by the way, than a mortgage insurance premium, but a private mortgage insurance. If you're making a down payment that is less than 20% of the home's purchase price, you're going to be carrying a private mortgage insurance more than likely. So if you need to pay the first month's private mortgage insurance, also known as a PMI, it's going to be paid at the closing. And you'll normally see a PMI with a conventional loan, by the way, and a mortgage insurance premium or an MIP with an FHA loan. Okay. The 21st thing is your fancy dancy property taxes. Property taxes, typically lenders will want any taxes due within the next 60 days of a purchase of the loan to be paid at closing. So then they have 2 months reserved for your property taxes. Again, one of those things that add up that go back to you in the form of future payments that you're making at with your buyer closing cost here. The 22nd thing, the recording fees. A fee is charged by your local recording office, usually the city or the county, for the recording of the public land records. This is to make sure that the city and the county recognizes that house that you just bought is yours and it's in your name, okay? The 23rd is a survey fee. A survey fee would go towards a survey company to verify all property lines and things like shared fences on the property. It's not required in all states, so it's hit and miss whether that's going to be your situation or not. 24th is the title company title search or an exam fee, right? This fee is paid to the title company for doing a thorough search of the property's records. The title company researches the deed to your new home, ensuring that no one else has claim to the property. So when you hear the term, oh, we got to make sure that your title is transferring free and clear from the seller to you, that's what the title company does, and that's the fee for their service for the title company title search. It's an absolute must, okay? 25th is a transfer tax. So this is a tax that is generally paid by the seller. Again, very creative buyers and a very creative buyer agent and a strong seller's market will sometimes offer to pay the real property transfer tax. Just simply call it transfer tax here. Every state, every county's got a different rate. You want to talk to your trusted real estate advisor so that you have a better understanding of what that rate is. And if you choose to offer it to a seller to help win a bidding war, then know how much you're going to be paying for that, okay? If you're a seller out there, it should be broke down in your estimated net sheet when you have a listing presentation with your trusted real estate advisor. You should have a description of the fees that you'll be charged as a seller, okay? So then the 26th thing is an underwriting fee. fee. An underwriter, another person involved in this process, also goes with your lender, covering the cost of researching whether or not to approve you for the loan. So they actually have that determination. Now, if your local loan officer did a great job up front of verifying your income, your assets, your credit, and your employment situation, and there have been no major changes throughout the closing process, you're going straight through pretty good with underwriters. Now, underwriters, for reference, when you reach that point of final underwriting in the closing process, they generally have a lot of questions. So they're going to probably ask you to provide different documentation. Just giving you a heads up there, okay? The 27th fee will apply again to the military here with a VA funding fee. The VA funding fee, it's a couple of interesting things to note about a VA funding fee. If you're active duty, you're going to have one. If you're a veteran, you're going to have one unless you have a 10% or greater disability rating. If you have a 10% or greater service-connected disability rating issued by the VA, then you're going to be exempt of this fee. It's something to know about out there if you're active duty or if you're a veteran, okay? And then the 28th one that I like to bring up because it's so small, and some banks charge it and some banks don't, but you never know. So it's important to know, and it's important to think about, is actually a wire fee. So whenever you wire your earnest money deposit into the escrow account, when you wire that last bit of money into your escrow account to close on your new home, your bank may charge a wire for that service. And on that, it could be $15, $30, it could be whatever. It's whatever your bank charges, so you need to talk to them about that. That brings us to the third point of this video about what you're going to learn, and that's how much are buyer closing costs. It's generally best to plan on between 2% and 4% of the home's price in your buyer closing costs when you're budgeting out how much it's going to cost you to buy your new home. So let's take a $500,000 home as an example. If it costs 2% in buyer closing costs, that means your buyer closing costs would total $10,000. Now for the same $500,000 home, if your buyer closing costs total up to 4%, then you'd be looking at $20,000 for your buyer closing costs. Your down payment and your buyer closing costs are two separate and distinct sections of purchasing a home. One is the down payment. One are the costs associated with closing on your new home. And again, they are called buyer closing costs for a reason. We just listed 28 of them that we just went over that actually go all to you, the buyer. There might have been a couple that the sellers or typical seller fees. So out of 28, 26 of them going back to you. Pretty interesting. And paying, and by the way, paying a couple months of impound for you. So think about that, consider that, because sellers are going to have seller closing costs, and they're generally about double to double and a half of what a buyer pays in closing costs, just so you know that. Okay. So then the next thing is, how can home buyers avoid closing costs? Well, that's an interesting topic, and each option has its own trade-off. There's things called down payment assistance loan programs, home as possible program. There's some state, local, and city loan programs that may be unique to your area. Like in ours, that's called the Hope Brings You Home program right now, where buyers can actually buy a home with essentially almost no money. They're getting their down payment covered and their buyer closing costs covered for it if they qualify and if they buy in certain zip codes within the Las Vegas, Clark County area. So your city, your county may have similar programs, so you always want to discuss that with your trusted real estate advisor and your local loan officer to see which programs are available to you and if it's going to be a good fit for you going forward. Just something to know about, okay? And then there's also options depending on your credit score and what's called debt to income ratios. Again, all this lender goodness. You're going to have to talk to a loan officer. I'm a trusted real estate advisor. You're going to want to talk to a local loan officer about this, but they can actually roll some or all of your buyer closing costs into the loan. So you may not be paying for it up front, but you'd be paying for it in the form of a higher interest rate over the life of the loan. Whether that's right for you or not, only you can tell, and only you will know. Started this video with the 4 things you learned, so now you know how much, you now know what are buyer closing costs, you know what fees you can expect at closing, you know how much the buyer closing costs are, and now you know how you could possibly avoid some or all of your buyer closing costs. Oh, by the way, on that last point about buyer closing costs, can they be negotiated with the seller? Yes, they can. Depending on the market, whether it's a seller's market, whether it's a balanced market, or whether it's a buyer's market, will ultimately either help you or work against you on getting that negotiation done successfully with the seller. In a strong seller's market, you might as well forget about it unless that property's been on the market for an extended amount of time or isn't in the best of conditions. It's highly unlikely a seller's going to be willing to pay buyer closing costs because, again, they're paying roughly double and a half of what you're going to be paying as a buyer for your buyer closing costs with their seller closing costs. Something to think about, something to know about, something to consider, okay? So this has been a really fun time with you today, and I really appreciate you hanging in there with me in this video. So now it's actually your turn. Tell me what the most significant thing is that you took from this video today in the comment section below. Share your insights and share your wisdom with our community and help us to learn and grow together. Now I'm going to go ahead and pop up my contact information. If you want to reach out to me, just let's say hello. My contact info is on the screen and down below. Same time, you need help finding a top agent where you live, or just let me know. I'm always here to help you. If you haven't already done so, I'm going to ask you to do 3 things. Subscribing to the channel now, liking this video, and sharing it around with someone you know is going to be able to help. Because right now, I'm sure that you can think of just one other person this video could really help. Share it with them, please. Thank you. Thank you again, team, for hanging in there with me today. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Make it a wonderful day.